Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, December 2nd, and we got a few news here today. And wow, we had a wild and crazy day yesterday, so that we'll touch base on here. Let's take a look here. Today we got the initial jobless claims jumped up from last week from 410 up to 436. We had an additional 26,000 people that claimed that went ahead and renewed or went as new unemployment. So obviously not a very good report there, as we were kind of going downwards, and now we went upwards. Pending home sales jumped. This data's been going since 2001, and this is the biggest monthly jump that we've had on record. So 10.4%. So they're kind of attributing the 10.4% towards what they found on the jobs, some improvement in the job area. So they're kind of contributing it towards that, the 10.4%. So we'll see. And then as a result, stock market's up. The mixed kind of news. We had the European Central Bank. They decided they're going to extend their liquidity program. And then some retails are reporting some better than expected earnings, so that's also helping the stock market. So right now the bulls are out in the stock market. So let's take a look at the bond market here. And as we saw this yesterday, we had a huge gap, about 70 basis points, and then about another 69 basis point drop. So we had over about 138 basis points that we dropped yesterday. A lot of it has to do later on when we had the Fed Bayes book came out, that most of the districts, except for maybe two, showed improvement. The economy is showing some more improvement. And then, so they kind of were contributing that towards the quantitative easing. I don't know. I think it's a little too soon to say quantitative easing. I think it takes a little bit more time for it to kind of get into the markets to be able to see those results. But again, we'll see. Also, the result was there was talk yesterday about the ECB, what are they going to do? Are they going to extend the liquidity? And then there's rumors that the U.S. was going to go in there and help them as well. So a lot of people were flocking, buying over European bonds in that case as well. So just kind of a free fall later in the afternoon yesterday. So resulted in about 138 basis point swing from where we left off on Tuesday. So kind of a crazy day. Now we had this huge gap here. So typically anytime we see gaps, we usually see some type of closing. So I personally think we're going to see that close up. And especially today's news, when you have news of ADP coming in at 98,000, and then also you see worsening when it comes to unemployment, the initial jobless claims, why aren't they pricing that into it? So those are some questions that I would personally have. I think it's kind of crazy. Rates are a little bit better today after some of the repricing we had yesterday. As you can see, we started down again, we're kind of working our way up here. So we'll see how it goes. Tomorrow's going to be the big day. We get the non-farm payrolls with the unemployment rates and everything, where we're going to be at. So that's going to be the big news, and that could potentially bring us upwards as we can see those numbers. So as a result, we had a crazy day yesterday, and today probably won't be any different. We could have some very volatile. We're gonna have a very volatile week this week. So hang in there, and we'll get through this. And you guys have a great day.